lessons up in Gainesville.
Mhm.
Oh, I was going to use a microphone tonight. I forgot.
You're live.
Live. Hi, everyone. We'll get started in a couple minutes. Make sure everybody gets a chance to sign in. Okay, everyone, welcome to another episode of Tuesdays with Terry. Tonight, we're just going to review and wrap up our Homebuyers Bootcamp. So this is really session 4 of the Homebuyers Bootcamp. I want to let you know that in the chat tonight, you'll find links to all the episodes in case you want to go back and review some of the episodes from the boot camp or any of the other episodes. This is actually episode 19. So we've discussed several topics, and some of them you might find timely and useful. Also, you'll find links to all of my Facebook real estate pages. Each one of the pages has information related to that specific area. And you'll see all my contact information. So feel free to contact me, email me, text me with any questions you might have, any advice you might need, and I'll be glad to share my experience with you. So this is the last night of the Homebuyers Bootcamp. We will pick this up again in about a month or so, and we will do another 4 episodes then. We'll change it up a little bit so it won't be the same information. We'll have different slides and maybe we'll have different approach to it. Also, I want to encourage everybody to take the opportunity to send me your contact information so I can get you a copy of this book, Your First Home. It's a great book. Bestseller when it came out, and nothing has changed since then. The Proven Path to Home Ownership. So everybody that's tuning in that or watches it later sends me their contact information. We'll get you a free copy as long as the copies last. I have about 15, 20 copies left. So let's just review some of the things that we went over in the previous episodes. Another thing I think you should take advantage of is our down payment resource webpage. You'll find the link to that in the chat tonight. Or if you're on the Facebook site, you can also find links to it on the Facebook site. All you have to do is log in, some basic information, household size, income, where you live, zip code, and you'll get a free report listing all the down payment assistance programs you may qualify for. There's no obligation. You can take this report, print it up, show it to your lender, show it to your realtor, give me a call, and I'll be glad to discuss it with you. Sometimes they can get a little complicated. I've worked with a few of them, and I have some lenders that have worked with them that are kind of familiar with the program. So I encourage you to do that. Take advantage of it. The book and the down payment assistance report. Now, we discussed doing a budget, setting things up in 3 columns, A, B, and C. Hopefully some people have taken advantage of that, printed this up, or made one of their own. We discussed talking to a lender because it's important to get the lender's perspective on your credit, your ability to obtain a mortgage from a lender. Remember, even with the down payment assistance programs, and some of them are very generous, you still have to be able to qualify for a mortgage. That's the first step. So I listed 3 lenders that I work with. Each one of them has their own specialties. They've all worked with our first-time homebuyer programs. And I've done transactions with all of them. Now, there's a perception that if you talk to a lender, whether it be your bank, your credit union, a mortgage lender, that when they pull a credit report, it's going to lower your credit score. That's kind of a myth. It's only going to lower your credit score by a few points, and that comes right back. Excuse me. It becomes pretty obvious that you're shopping for a mortgage, so that's not going to get held against you. Now, you may find out by pulling your credit report or having a lender pull your credit report that there may be some issues in there that may take a little bit of time to work on to bring your credit score back up. Sometimes you may need some professional help. These are 2 companies that I've worked with and my clients have worked with in the past. They're very good. They can help you. They can help you quickly. Nothing is for free. However, they can also keep lenders, or I should say credit people, off your back while you're doing this. Once you enter into a program, then people can no longer contact you. Credit Brain in particular has a division that specializes in student loan repayment plans. And some of them can be as low as $0 per month, depending on your situation. So if you're carrying some student loan debt and it's becoming a drag, or you're in forbearance, or you're behind on your payments, please contact one of these companies and see how they can help you. We also discussed calculators to get an idea of what your monthly payment might be. There are so many on the market right now. This is actually a calculator from Kevin Crookham at Caliber Home Loans. Caliber Home Loans does the most lending in the state of Florida with the state of Florida Housing Finance Assistance Programs. So Caliber Home Loans leads the state in that category. And this is one of Kevin's calculators. It's very easy to use. We can get it for you. There are others. I have other calculators that I can send your way. Kind of gives you an idea of what some of the payments might be. It's a good idea to use one of these. Now, we've discussed this in the past, that there are many programs out there to help you purchase a home or condo or townhouse with little money down. There is a myth out there that you have to put 20% down to buy a home. That would be a conventional loan. And there may be some banks that require that, but there are many, many programs out there that you can get in for less than 5% down. And FHA which is a FHA guaranteed loan. They don't give you the loan, but they guarantee the loan to the lender. That is 3.5% down. You have to have a minimum credit score, usually of 580, but it's not just a credit score. Your lender can tell you what other qualifications go along with getting a mortgage. There are also some loans, if you can get your credit score up high enough with no money down. There are what we have opportunity zones now that have been created. Purchasing a house in an opportunity zone might open up some other programs for you. USDA has some programs that are basically in rural areas. That would be maybe Pahokee, Belglade, Okeechobee, Martin County, Port St. Lucie, West, where you might be able to get in a program for zero down. So there are programs out there, and it's important that you talk to a lender and you talk to a realtor that has worked with buyers and can help you go through the maze, the bureaucracy, and find a program that's best for you. Keeping in mind that sometimes down payment program, assistance programs, loans, etc., may come with a little bit higher interest rate. So whether you need the money down for a down payment or you need the lower interest rate, there's a lot of possibilities out there. And you just need to work with somebody that's qualified in working with first-time home buyers. Now, speaking of financing, here is a sheet I put together when I was teaching classes at the Urban League. And this is basically a closing timeline. Now, you can see I just whited out some things on the top there. You can look this over. This kind of gives you an idea of the time frame from having your offer accepted to actually getting your keys to the house. Now, what's important here is look to the right-hand column under amount. Earnest money deposit due to title company. Once you put an offer in on a house and the offer is accepted, then you have usually between 1 and 3 days to make your, it's called an EMD, or earnest money deposit, to the title company in the form of certified check. Most people prefer wire transfers now. That could be usually about 3%. So for even numbers, let's say a $100,000 condo, you're going to need to put $3,000 down. Now that money doesn't go to waste. But depending if you're using a down payment program, they may cover the down payment assistance part. So you might not have to worry about that. Then the next thing is an inspection period. Usually we use as-is contracts here in Palm Beach County. That means you're buying the house as is, the way it is. Doesn't mean that we can't negotiate repairs, but there's different contract language in an as-is contract. And one of the differences is the inspection period. Now, you choose the inspection period. It's usually anywhere from 5 to 15 days. However, in a tight market like it is right now in Palm Beach County, the smaller the inspection period is, the better your offer looks. So during that inspection period, you want to bring in all your inspectors and get the reports back from them, and then make a decision whether or not you want to continue to purchase the house. And if you choose you don't want to continue to purchase the house, you get your down payment back, and then you go on to the next house. Or you do some negotiating. However, once that period passes, the only way you can get out of the loan is if the bank denies your loan. Then it's up to the bank, and it depends on why they deny your loan. So let's move down here under the inspection period. You have home inspector, search for open permits. You're going to have to pay for that. That's why we say you have to have some money saved up, even if you're using a down payment assistance program. Now, a home inspection could cost anywhere from $250 to $500, depending on the size of the house and the scope of the home inspection. I don't want to belabor this too much, but the home inspection is basically a visual check by a professional to see what problems there might be. You know, they don't get in depth. They can only tell if the refrigerator is operating, the dishwasher is operating, all the electrical outlets are operating, if the fuse box is up to code, if the roof is leaking. They can't really tell you how much life is left in the roof. You know, they don't get behind the walls or anything. They're not a mold inspector. But you take that report and you decide whether or not you want to go ahead with the purchase. So you have to get that report before the inspection period is over. So that's anywhere from $250 to $500. I have an inspector that's usually $250 or less. I have several inspectors. You have to have a wind inspection. That's in addition to the home inspection. You need that for insurance. You know, that adds another $100 onto the home inspection. It's usually the same person. You may need a termite inspection. The lender may require that. And if you're purchasing a wood frame house, you definitely need a termite inspection. Those aren't that expensive, $100. And then they can tell you what issues there might be or what issues might be coming up. Once again, you use that report to decide whether or not you want to move ahead with the purchase or ask for some sort of repair or money for a repair. Now, if you're purchasing a house, say out in the acreage, out in Waxahachie, Western Martin County, a lot of areas in Port St. Lucie, you might not be on public water. You might not be on public sewer. So you're going to need a septic inspection, which could be $200 to $400. And you're going to need a well inspection. Your water has to be inspected. A lender is going to require that. If they don't, the underwriter will catch that at the last minute. So that could be $250 to $400. Somebody will come out, they will test the water, they will inspect the well, and same with the septic. Septic, basically, they just come out to make sure it's not leaking. The next few items are just dates and timelines that are in the contract, and your realtor will be keeping track of these and letting you know as the dates come and go, and if you need to do anything. Appraisal. That's another issue. You're going to get an appraisal after you have the inspection and you decide to go through with the purchase of the house. Then you make your loan application with the lender, a formal loan application. And then the lender will want an appraisal. And they will order an appraisal. They don't get to choose who does the appraisal. You don't get to choose who does the appraisal. But you do have to pay for it. The buyer pays for the appraisal. That could be anywhere from $500 to $700. It really depends on the size of the house. Sometimes a lender will fold that into your mortgage. Of course, you're paying more for that over the course of 30 years, but if you're low on funds, some lenders will tack that on to the mortgage. I know that Kevin Crookham at Caliber has done that for a couple of my clients. It's not an everyday occurrence, and keep in mind, they're going to have your bank records because they need to see your savings. Any money that you get has to have a paper trail, and it has to be aged, has to be in there for a certain period of time. You can't go to closing and all of a sudden get a gift for $5,000. There has to be a paper trail for that. And your lender can discuss all that with you. So You can't say that you don't have any money for an appraisal and ask the lender to fold it into the mortgage when you have $5,000 in your checking or savings account. They know you have the money. Basically, those are the last things that you have to pay for. The rest is just paperwork. You're going to need insurance. It's called an insurance binder before you close on your house. Now, that gets taken out. You don't have to pay for that. That gets included in a mortgage. The bank wants to make sure that there's going to be insurance on that house. And basically, you get to pick the insurance company. You get to pick the company, the price. The lender's going to have certain criteria that you have to make sure you're insured under, but you get to choose, and that will be folded into your mortgage, and they're going to take a year out up front. And in future years, the mortgage company or the bank will be responsible for paying the property taxes because they want to make sure those taxes are paid and the property isn't lost at a sheriff's auction. That's pretty much it for the closing. So keep in mind, as we talked about some of the issues that you're going to have to pay for, that 38% of the buyers out there that are buying houses have made some financial sacrifices to purchase the home. So, you can't get everything. You can't get everything for free, for zero money. There was a time when you could do that. That was prior to 2006. And that's one of the reasons that we got into the mortgage problem and all the foreclosures that we had at that time. A lot of people were getting into loans without any money. And, if you don't have any money in the property, then you really have nothing to lose. And that's the way banks look at it now. So they're a little bit more particular. They want to see you made some sacrifices to be able to get in that first home. So I think what many, especially first-time home buyers, don't realize when they start to search is that saving the money, getting your credit report, getting your credit score up, talking to a lender, getting a pre-approval is not the hardest part. That's the easiest part. The most difficult part of the whole process is looking for houses and finding the house that you want to put an offer on. Keep in mind, when you're out looking for houses, whether you're looking with me or somebody else, that you're not going to live in this house for the rest of your lives. I know I'm a little bit older. Parents in my generation, they bought a house and they stayed in that house all the way through to the very end. And then maybe they went to a nursing home or they moved in with their kids. So fun fact, the average American now will move 12 times within their life. So keep in mind, you might not find the perfect house that checks off all the boxes on your want and needs list. But that's not going to be the house that you're going to spend the rest of your life in, pretty much guaranteed. So how long does it take to find your next house? Well, statistics say that buyers typically look for 10 weeks and look at about 10 homes. I can tell you that from my experience, that is not accurate. It's not accurate for me and my clients. 10 weeks is a very long time to be out there looking for houses. Now, understanding that in this market, there is a shortage of inventory. That could be changing in a few months. What we're hearing is that there are a lot of foreclosures that are going to be taking place. A lot of people got forbearances, and some of the mortgage companies It didn't really work with the people. They gave them a forbearance, but when the forbearance is over, they have to catch up on all those payments. And a lot of people won't be able to do that. There could be 6 months worth of payments. Uh, they might have been able to put that money away because they didn't have an income. They lost their job. So 10 weeks is a long time. I've worked with clients that found houses in a week, in 2 weeks, in a month. It also says they'll look at about 10 homes. That's pretty accurate, but it wouldn't be 10 homes over 10 weeks. With inventory the way it is, there aren't that many houses to look at depending on the price point right now. And the way I work with somebody who's in the market to purchase is we start with a list of all the properties that are on the market in their price range and in the area they want to live. Then we whittle that down and we go through those. From that point on, we're only looking at new houses that come on market. So if something pops up today, then we want to go out and look at it as soon as possible. Keeping in mind that the time has changed. I mean, like daylight savings times, and it's hard to come home from work now and go out and look at a house. Either it has to be done on a day off, on a lunch break, as soon as you get off work, or on a weekend. I remember several years ago, I was working with a first-time home buyer, and we could only go out and really look on the weekends, and they got frustrated. They wanted to start, going out after work, and we tried it one night. We went out and looked at a house, and the house was really great. It was in a gated community. The HOA wasn't that high. The inside of the house was really nice. So we went home that night, and they decided to do a drive-by in the daytime on their lunch break. They didn't have enough time on their lunch break to actually do a walkthrough of the house, but they could do a drive-by. Well, there was a tarp on the roof, a blue tarp on the roof, on the back side of the house. We couldn't really see that at night. So it's not really a good idea to be out looking at houses at dusk, because while you're looking at the house, darkness is going to fall and you will overlook things. So we're talking about if you look at this closing sheet here, this timeline, you'll see that it's generally 30 to 45 days from the time that your offer is accepted until you actually close on the house, meaning you get your keys. And you don't get your keys until all the money has been exchanged and cleared. So you might not get the keys to the house that specific day, depending on what time of the day that the bank sends the money, wires the money. Everybody wires money now. It could be backed up in the queue, so it might not make its way till 5 or 6 o'clock at night, which isn't going to be enough time for it to clear. Therefore, funding, it's called funding, will happen the following day, and that's when keys get exchanged. But you can see why it takes 30 to 45 days to close, because there's a lot of things that have to happen in that time. And the final thing that happens is the whole package is sent to an underwriter. The title company has an underwriter, and the loan company has an underwriter. They look over the whole package, and they might have some questions. They might ask for additional details. If it's been over 30 days, they might ask for another month's worth of bank statements. So there are lenders that can do it in 30 days or less. Those are lenders that have their own in-house underwriters. So each lender is a little bit different. I can tell you banks are slow, credit unions are slow, mortgage companies are a lot faster. Another fact is, this is from 2019, most buyers spent 3 weeks searching for homes before contacting an agent. Don't do that. don't waste your time doing that. If you want to look at houses, go to Zillow, go to realtor.com. They'll have pictures there. They don't give you, let me forewarn you, they don't give you all the information. They don't tell you if the house has been sold. They don't tell you how many days it's been on the market. So you're not getting real-time information. They are getting that information third hand. We have the information, we input it into the MLS, and then the MLS sells it to these third parties like Zillow, Trulia, Realtor.com. So it's dated information. Contact a realtor. Don't waste your time. Have a realtor set you up on a search so you can quickly look through all the houses that are on the market, see why they're on the market, see how many days they're on the market, and then work with the new listings as they come up. Never seen mortgage rates like this ever. Never. So one of the reasons that I started these home buyer boot camps again was to try and get as many people prepared for the home buying process as possible so they don't miss this opportunity, because we may be headed for another recession. We may be headed for inflation. So let's get a house, let's get a mortgage with these low interest rates. Let's not pass up some of these down payment assistance programs that are available, because they may go away. So I ask you, we've had 19 episodes of Tuesdays with Terry. This is our 4th episode of the Homebuyers Bootcamp. You should have a pretty good idea of me as a realtor and what my knowledge base is and what my commitment is to helping people find a home, especially their first home. So it's very important that you find a real estate agent that you feel is honest and trustworthy. So if it's not me, find somebody. Work with a realtor. Let me tell you a couple myths. It doesn't cost you anything. And if you don't use a realtor as a buyer, the price isn't going to be cheaper for you to purchase that house, because the other agent will take both sides of the commission. The commission has already been negotiated. It's in the MLS. So why would you not want to be represented? Why would you want to drive around, look for signs, and call that realtor on that sign? The realtor has a relationship already established with the seller, and you're somebody new. So just keep that in mind. And if you feel that you can trust me, if you feel I know what I'm doing, I'd be honored to help you find a house. You'll be able to find all my contact information in the chat tonight. Let me know if you'd like one of these books. They're very popular. I still have a few left. Once they're gone, there won't be any more. Either text me, email me, send me a Facebook message, and we'll get the book. It's a hardcover book. Please use the down payment assistance webpage. It's free to you. You have nothing to lose. Please check out some of the other episodes. Please like my Facebook page. There are other Facebook real estate pages I have that also might interest you. I encourage you to give me a like and follow those pages. And once again, you'll find all the information you need in the chat tonight. And I will have all these slides up on this Facebook page before the end of the night. So if you want to go back and you want to copy or look at the slides again, or you want to have a copy of the slides, that's great. we are going to take a break from Tuesdays with Terry's for 2 weeks. I will not be here next Tuesday night. I will be out of town. So we are going to retool it a little bit. We will come back with another Homebuyers Bootcamp. That'll be probably in another month or so, month to 6 weeks. But we'll have some other topics, some other timely topics that we'll discuss in the meantime. And I hope that this has been informative for you. And we'll see you on the next Tuesdays with Terry.